All right, looks like we're live. Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to try and get you folks what you need to know before you roll, and that's going to be talking about the economic data, see how that impacts the overall markets with some market analysis, sprinkle in a little geopolitical fodder to round off that analysis, and then talk about some strategies we could implement into our portfolio based on all these assumptions we come up with in our analysis. All right, so without further ado, let's get on with this and talk about some economic data and geopolitical, whatever is going on in the markets to really start driving this. I mean, even Elon Musk is driving the markets these days, it seems like. So with that said, we've been talking about the employment picture here. You know, we've been seeing the unemployment rate do some funky things where we saw unemployment go really down for a while there, where we were seeing some historical lows right after this pandemic, which just didn't really seem to make sense because there's a lot of folks that just weren't working. Well, we talked about how this statistical anomaly happens, and it has to do with a discouraged worker. If they stop actually looking for a job, trying to get hired, then they fall off the list. All right. Now, what we're seeing right now is with this inflation and everything else going on, that we're starting to see some of these folks, these discouraged workers, come back into the labor force, which is going to start skewing these statistical points, because if there's more workers coming into the workforce that are unemployed, it could make the unemployment rate start to move up. And you remember when we were seeing that unemployment rate dip, I was saying this is a bit of a disconnect. We're not seeing the hiring happen as fast. There's folks out there trying to hire and can't find people to hire, but unemployment rate was dropping, not due to hiring, but due to folks falling off that unemployment list because they became a discouraged worker. Retail sales number here in the United States, we got it coming in at 0.6%, expected to be 0.7. They did revise last month's number higher by a percentage point. We were talking about that yesterday. Sorry, my fingers slipped here. The manufacturing numbers that we've been talking about, remember we saw the purchasing managers numbers forward looking, really being pretty bullish here, but seeing then the manufacturing numbers, the actual data points that are being released, being much worse. And Philly Fed is no different today, coming in at 2.6%, expected to be 14.9. So a real miss on that. Unemployment claims ratcheted higher, 200 to 18,000, expected to be 200. Some folks might be thinking that that's, bearish, but it's the fact that folks are coming back into the work, actually looking for work, will help this economy, because we've had inflation through wages because the folks that are willing to work are able to demand just about whatever premium they want for their wage. So that has been a real driver of inflation, as well as mining and everything else. Crude oil not really helping matters here. As a matter of fact, imagine this scenario. I was at a gas station yesterday. I live in Arizona, so sometimes we can get out in the middle of the desert, and obviously those gas stations are a little bit more expensive. Well, one place in particular was $5.50. And I saw a couple, they were talking about filling up their tank and literally talking about $100 bill that they were going to try and budget for gas or whatever else was going to happen there. All I heard is, I got $100. How much are we going to spend on gas here? Are we going to get $5 and go down to the next gas station, because this one was out in the middle of pretty much nowhere. So that type of scenario, think about it. They put $11 in their gas tank. As a matter of fact, I took a picture of it. $11 in their gas tank. It cost them $70. All right. So imagine if you were on a budget and trying to figure out how you were going to spend $100. Well, that $100 going into your gas tank, because you were in the middle of nowhere, just is gobbling Americans' budgets. All right. So that's my real point here, is the velocity of money, that while folks are coming back into the workforce, I think it has to do with some of these inflationary pressures. They're seeing their money fly out the door and know that they need to get a job. So we're starting to see that come up. But the other flip side of that is these inflationary pressures around like crude oil and things like that is going to start slowing the economy. Those are what we're talking about, these type of stagflation, where you start to continue to see higher inflation, higher prices, but The fact of the matter is now we can't afford to drive anywhere, or we can't afford something, so we're going to pull back on our spending. That's what I think is going to start building here. So we need to really get crude oil coming off. The administration right now has not passed any permits for any type of oil infrastructure, whether it's for refiners to basically, drilling a new well. So we're going to continue to see pressure to the upside in crude oil. So I'd say risk to the upside here in crude oil still, despite the fact that we've come down to that 50-day simple moving average. Then we go over here to the bonds. Bonds are moving higher, right? Well, we know that the Fed is not going to allow the bonds to move higher. We were already just recently talking about the inflationary pressures. Well, you raise interest rates to get those inflationary pressures to ebb a little bit. Well, right now, bonds have to go higher. Why? Because it's a flight to safety, folks. It's going to be some weird market action here in the bonds, despite the fact that we know that interest rates are going higher. That means the price of bonds needs to go lower. They are inversely related. So with that said, we're seeing price move higher, which is telling us that interest rates are should be coming off in the long term. These are the bonds. So we're talking, 20 years down the road here. But we also are in a rising interest rate environment where the Fed is actually physically lifting that interest rate, which should cause bond-related products to go down. We're not seeing that because it's a flight to safety. People are more fearful of losing money in the stock market right now. So that's getting this a little bit of a boost. Now, we talk about this in webinars where when we see something that's an oddity like this, we should take advantage of it. One of the things we should take advantage of is covered calls, lowering overall cost basis on a bond portfolio. I know can't really do it with your bond because you might have a surety bond or you might have a revenue bond for a local municipality. How do you hedge that? Well, I talk about that in these videos, so please check that out. Don't forget to go to YouTube and check out those at Pro Trader Strategies. Gold is going to need to push to the upside, folks. It's a flight to safety. Again, I would rather see gold, or I would expect gold to make those moves a little bit more so than what we're seeing in the bonds, because the bonds we know are physically being altered, meaning the interest rates are being lifted by the Fed, and that should cause price to come down. Gold, on the other hand, being a flight to safety, that should fluctuate due to supply and demand there a little bit more. We've gotten strength in the dollar, but that shouldn't push it down too much. I think we might be finding a bottom here in Bitcoin. I'm not completely on board with this yet as a flight to safety or a retainer of value or any of those things that we talk about with financials and investing. But I think that Bitcoin isn't really going to go anywhere. I think the cryptocurrencies will be here to stay. What price level will they be here to stay? That is unsure at this point, as far as I'm concerned. But I think that we did get finally a nice bottoming pattern at a low area that probably panic some folks out. So, like I said, nickel and dime, like kind of just pick away at these stocks and stuff like that, or investments that you're looking to put on there. All right, NASDAQ continues to slide. I've been warning you folks, like, despite the fact that we're getting some continued upside here, yes, dogs know how to open the doors, that we're going to see some dead cat bounces here where we get the bounce. All right, are we getting that relief rally now? No, it's just a dead cat bounce, 1 or 2 days to the upside, and then that massive drop. That's what we're continuing to see. And when you get a couple of those in a row, that's where people stop trying to nibble away at buying here. You guys know I started nibbling away with some Walmart, and we know what happened with Walmart and Target yesterday. Not so pretty, despite the fact that they came out with better than expected earnings. It's looking like we are, investors are worried about a recession here. Dow Jones Industrial Average looks like it's going down to test our Fibonacci there. We are holding right now in the mini S&Ps, but again, it looks like it's going to break away, and we are going to test another leg lower here in the equities. If we can hold this, maybe get a nice another maybe make it look tweezer-ish bottom, where we get another hangman doji here, where that would look very nice for a bottoming pattern. I'd be looking to really start adding to a portfolio at that level. So nothing really going on right now. Friday, we've been worried about Fridays and how investors are going to react going into a weekend with that unknown. And last weekend, we got some strength into it. So are we going to see some follow through today and tomorrow? I'm going to keep my eyes on it. I'm usually pretty aggressive, got a quick trigger finger to jump on. But as of recently, been writing out a couple of shorts and trying to layer on some newer trades. So as a matter of fact, let's just get to it. EA Sports, I'm going to talk about this. There's always a bull market, like there's always a bear market. When market's always in a bullish trend, I'm usually the one that's the counter of that and talking about where we can find opportunities to the downside. Well, we're flipping this script here a little bit and now looking for bullish opportunities here. This is going to be a bullish opportunity that I will talk about today in the webinar with the risk reversal. You can use the risk reversal in several different ways. Some of you folks probably wish you were using the risk reversal not too far off here with your portfolios. We're going to talk about that next couple of weeks here. For the next 2 weeks, we'll be talking about this, drilling down on the risk reversal. We'll talk about how you can implement it for a bullish move or to hedge some of the things that you already have in your portfolio, which could be very helpful. We've gone through the covered calls, right? We're looking at some of those. Now, this is a little bit more of an aggressive stance on a bearish correction here, all right? Or a bullish correction for that matter. So please check that out today. We're also going to be, you're going to need to make sure you hit the subscribe. There's a little bell right next to it because sometimes I come in unannounced, like this video, unannounced about 15 minutes early. So make sure you guys are smashing the bell there if you want to catch this live. All right, so the thing I was talking about, Target, actually, we were talking about Walmart did get a bit of a pullback, but it was exacerbated by Target. I don't think the Target even missed that bad. It's just a worry about inflation, supply chain issues, all of those things. You got inflation and a workforce participation that's not really too thrilled about coming back to work, inflation for pricing. As a matter of fact, I think they said either Walmart or Target said that they were overstaffed. And that was one of the things that really kind of sent them into a tailspin. But all of these brick and mortar folks are getting pullbacks right now. To be honest, I think that every time I walk into one of these stores, they are still really busy. I would say opportunities abound here for selling puts. If that's something you'd like to get into, make sure you check out the webinars on that. I am looking to add some puts here as well. We did it with, I'll go to Walmart. I did it in Walmart and talked about it. It's likely going to be put to me. I'm at the 125 puts that I sold. This is pulled back. I did it really small, taking advantage of high volatility. Well, yeah, high volatility and directional move incorrect. So that happens to the best of us, folks. It's pulled back. I'm looking to take Walmart in my portfolio 125. That's all I can do right now. Collected that credit of about $1.40, I think it was. Maybe it was actually the Walmart was only like around 50 cents. So break even just slightly lower than that. The other one, Home Depot, is very close. We got a little bit of a pullback. As a rising tide lifts all ships, the tide going out, all ships get stuck, if you will. And that's kind of what's happened to Home Depot here. They're getting pulled down or thrown out with the bathwater, if you will. They came out with better earnings as well. The area is folks aren't going to have any money because we're in a recession, that they won't go to these places. My thing always is around a recession or depression, if you will, they're probably more likely to go and spend money at these types of places than to get a contractor to come out to their house, which those are all GDP kind of things. It's just shifted a little bit here. And I think that, while they might not do as well as in a robust economy, I think that they will have some staying power. All right, so Home Depot also sold some puts in there, and hopefully those will hold up for me a little bit there. The puts in Home Depot that I talked about yesterday, I don't remember what the price was on those. Home Depot, I sold the June 270 puts in there. So you can see I'm about $15 away right now. Those June 70 puts I sold for $4.60. The Walmart I did for $1.60. All right. So those are the two trades that I've got on. Walmart looks like I'm going to be put some stock there, get long, and then hopefully Home Depot makes a turnaround here with the broader markets. So that's all I got for you guys. Hope you guys have a great one. Check us out this afternoon. Hit the subscribe button because I'll be popping in here talking about how to do the risk reversal. All right. If you want to participate in that, the bell is the best way because that will give you the announcement. All right. Don't forget to smash that like for me. Thanks. You can't take that. Take it easy.